Hello, everybody. This is Mickey Mao with CartoonMoneyPrinters.com. Today is May 26th, 2025. It is Memorial Day. Um, so everybody in the U.S. is taking the day off. I hope all the veterans are out there doing well. And we got to remember those who have sacrificed for this country, as it's a national holiday. So today we're gonna get into some monthly TA, and I am with Astronaut Toad. Why don't you go ahead and say hey?
Good evening, everybody. Happy Memorial Day. Memorable, respectful Memorial Day.
I always forget the irony. Yeah. Without further ado, let's go ahead and jump into it. Just real quick, go to CartoonMoneyPrinters.com. Um, Check us out. It's a $25 a month subscription. I'll be considering a deal relatively soon. Um, so keep an eye out for that. I'll probably post it on Twitter when it happens. Um, yeah, why don't you go ahead and share your screen, which you did. Let me pop this over here. One over here. Hey guys, welcome in. And there we go. I see your screen. Let's take it away.
Yeah, good evening, everybody. It's been an exciting month so far. I am going to be off in the wilderness again this coming weekend. So this is effectively my end of May, beginning of June technical analysis. And it's pretty straightforward on the monthly chart. We have just a beautiful follow-up candle for May, right up to the all-time high, blasted through it. Got a little bit of a wick now. Price is currently hovering right around the previous all-time high, but there's still 5 days left in this monthly candle, so it could drop. We're just looking at the monthly chart, doing basic technical analysis, one chart time frame at a time. Okay, on the monthly chart, with 5 days left, this thing could blast through and close up above higher, in which case that would be a strong bullish setup, obviously, and we would want to look for a retracement to find a long, and then keep rocketing up towards the new all-time highs. And again, we always want to be prepared for either scenario. If anybody on the internet ever tells you this is what is going to happen, and they don't do any preparation for the opposite, bearish case, bullish case, don't listen to that person ever again, okay? It's that simple.
Yeah.
You need to consider what happens in both situations. So we have the idea of, if this blasts through and this month closes strongly above this pullback, that is awesome. There are some bearish divergences going on. We'll look at those in a minute when we get to the weekly chart. But actually, there's not really much to see yet on the monthly chart in terms of bearish divergences. But anyways, bullish case, this blasts through, closes the month really high, strong. Then, say it closes, not do that. Say this monthly closes like way up here or something. Then what we do is we watch these numbers. 97,000 or so mod would be equilibrium. 91,000 would be the golden pocket. And we would watch those numbers for looking for a long in June. Okay. Right now, those numbers sit at 93,210, 88,775. And then we have bearish bad news territory all the way down at 74,420. All right. That is an unhappy 420 for you. So that's very straightforward. If this month drops in the next 5 days and closes well below, then that makes this month a SFP, a swing failure pattern, which means that the more likely scenario is not just look for a long here or look for a long here, but target, look for a short around here after this monthly close and target that low all the way down at 74,000-ish. Okay, so this monthly close in 5 days will be very important. Whether it closes strongly above or well below, that'll be important. Let's go to the weekly chart. I'm going to hide this monthly setup. And on the weekly chart, there is not much to look at because this whole weekly chart is just nothing but up candles. 1, 2, 3, 4, 5, 6, 7. We're working on our 8th up close candles. And so I'm not going to update this right now. I'll post that later in the private Discord. But look at what happened here on this weekly chart. Perfect kiss of the golden pocket. And our very own Magbane nabbed along from this level, right? I remember he said that. I think he showed the trade. He nabbed along from this level, the golden pocket of this pullback, and rode it up however high, I'm not sure. But anyways, this is what we've got going on. I don't remember when I made this forecast, but good Lord, that's a ridiculously perfect forecast. Did I make that forecast back then, actually? Because this is nuts. I don't remember when I made this. Too bad you can't see. Modified May 26. Oh, darn, I shouldn't have. Oh, well, I guess we'll never know. Apparently, I made this forecast and it came out perfectly.
I was going to say, just
but anyways,
a couple times.
Yeah, I tried. It didn't work. So this came true, and here's what we're dealing with now on this weekly chart. We have a new weekly range. Actually, I'm going to drag this back. Let's see, where are we? Here's our new weekly range. I'm going to move this over. I'm going to clean this up because we don't need it. Clean. Now this range goes here. Oh, that's a different line there. Okay, so did it front run the golden pocket? Maybe it did. Maybe it tapped it on Binance or something.
Yeah, I think I remember it.
But here's what we're looking at. Okay. Anyways, here's what we're looking at on the weekly chart. We have this bullish fair value gap right there. Come on. Oh, did I accidentally overwrite my... Why no work? Why is my template not working?
Oh.
Okay, there it is. Wow, my computer's just being grumpy. Oh. Well, we're gonna blip here, guys. All right, hold on.
You were losing bandwidth when we first started.
Okay. Turned off my VPN.
Yeah, that's what I have to do whenever I stream.
Okay, so let's move right along here. Weekly chart. We are looking at lots of fair value gaps right here on the equilibrium to the golden pocket. So I'm really liking this area. I'm gonna turn on prices here for you. So on the weekly chart, we are looking at 93,000 to 10, 88, 775. Same as the monthly chart, because this monthly candle, two monthly candles are just blasting straight up. So here we are, same thing. But on the weekly chart, we see this fair value gap, and that's a nice confluence, okay? the daily chart. I'm going to hide the weekly chart after we look at it and just kind of get a lay of the land here. Obviously, on the daily chart, we have a bit of a bearish looking candle recently. I'm going to relabel this so we can see it a little bit better. But on the daily chart, this down candle is giving me some bearish vibes, but that's not a full pullback of engulfing two whole candles. So honestly, I could see it continuing to blast from here. What we have to look at is on the daily chart, we are looking at the previous all-time high, getting straight up, busted through. So that's a clean close, this pullback. What we want to do is draw market structure on the daily time frame, which I have all my daily chart market structure stuff here. So this is a doozy of a drop right here. Market structure is not happy about that. And then it blasted straight up here. And I am, for now, going to call this market structure. Depending on how you define market structure, that down candle there counts as a pullback. Now we have at least two up close candles. So that's making this my internal low. Okay. So on the daily chart, in order to get back to this weekly fair value gap, we would have to get bearish on the daily chart. But I'm seeing a fair amount of good reason for that to happen, because there's a fair value gap on the daily chart that was totally front run on the 50%. So now we're looking at this draw on liquidity, this low right above that fair value gap, 50%. And then there's another fair value gap in here. So this is confluence. This is a lot of liquidity hanging out around here. And that gives me reason to believe that this daily chart is starting to look like, I can't say find a short here, because you don't really want to short all-time highs, but I can say wait patiently and look for longs down here around this area, 99,000, 99984. There you go. If we give this some market structure, then that would be right around there. So yeah, golden pocket, look at that. That's what we're looking at. Love it. Definitely looking for a long right around that area. It would also coincide with this old high that probably is going to act as resistance because of how many traders are angry at that level. I don't know how else to put it, but that's a good way of describing it, basically. And then if this level fails, then we go down to this level and look for, see, you got another one of these little confluences here from this high lining right up with that. So there's your two levels on the daily chart, okay? Now we should also start looking at the par, which is our custom indicator that shows strength on like 10 different time frames. How many time frames do we have strength on? Yeah, 10 time frames of strength. See, so we've got 3 minute, 6 minute, 15, 30, 60, 240, 300, 720, 900, and 1440. This is one day. So I can go from a 1 minute chart of strength to a 1 day measurement of strength, all in one indicator. And we love this indicator. You can use it just for trading, but I use it in confluence with other indicators to actually find my setups. The thing to note here is that we are getting some serious bearish divergences going on. This, from this high here, that's a massive bear div.
This is the
And then
chart.
there's also, see how the blue is the 4 hour, the pink is the 1 day, and then the blue is the 4 hour. See how there's a double bear div from these highs all the way from here to here. That's all one big giant bear div, okay? So with that in mind, from this high, the 4 hour reloaded real quick, but the pink 1 day is still well above equilibrium, so it could keep dropping. Okay, and that'll give us about 10, 15, 20 candles from the high. So from here, from this high, we could measure out 15 candles and say until about early June, next Friday, at least we should expect a bearish trend or bearish pressure coming off of this major divergence, okay? Then after that, you get maybe 20 bars. So the Friday after that, June 13th, Friday, June 3rd. Ooh, Friday the 13th. Watch out what happens on that day. We might get some nasty volatility if you're superstitious. We could get a dip all the way down to that level. That's a nice square box. So after that, all bets are off. It could go back to the moon. But for now, this is the bearish pressure that we should expect coming off of this divergence. It might blow off the top.
Speaking of Friday the 13th and superstition, there's a lunar cycle indicator that's in the free technicals on TradingView.
Oh yeah, I've played with that before. That one is hilarious.
Yeah, that made me laugh when I saw it.
Another thing I'm noticing is that I drew in last week. I drew in this bearish divergence on volume, and that was an indication that traders were. See how this candle right here has terribly low volume. And it was a tiny little doji. Traders were bored, exhausted, unaware, or just done trading. And this is what happens. Volume drops. Everybody, right here, this candle, everybody gets bored or exhausted or just wrecked. And then that's when the move happens. And price shot up. And then we had this spike in volume as the all-time high, the old all-time high was broken. And now we are getting back down to this lower volume stuff. So what this means is it could roll over here, or it could, I would wait to see till it gets back up to the all-time high and then gauge the volume at that candle. If it's a huge doji, like a shooting star, and you would forecast a drop. Anyways, this is what we're looking at on the daily chart, and it could go either way. Could drop, be bearish. There is some good reason for it to be attracted to this level, okay? But there isn't a bearish market structure shift yet. Because here's how I draw market structure, okay? This is traditional, straightforward ICT basics. Since we have this big down close candle, and I am calling it a pullback on this uptrend, what we're looking at now is we have at least 3 up close candles. Therefore, what does that mean? What it means is, if this drops below this level and closes below that level, then you are internally bearish. You're not full on bearish externally, but internally you are now bearish. In order for you to get a full external bearish market structure shift, you would need to break this high first and then drop back down below that level, okay? So those are your two possible scenarios. If this happens, I'll draw it in. I think I have, yeah, internal. Or that, okay? Those are our two possible outcomes. Give that one a little bit of room to breathe. Either way, if either of these things happens, we are definitely expecting this level to get hit, okay? 99,000, right around 100. So watch out on that, okay? And we can go down to the smaller time frames and see what's going on, but it's more the same. There is bullish behavior going on. And then we get this little fiddling around at the top. We are resting. We can begin to see how we're just resting right on top of this all-time high, the old one. We got wicks passing through the all-time high. And right now, honestly, look at what I'm seeing. This is bearish. You want to know why? It wicked the all-time high here. Then it wicked the all-time high from above and acted as support. However, once we came back down below the all-time high, it broke clean below it. And then when it came back up above, it's not showing support now. Where's my bearish? There we go. This is bad news. See how the price came back up above this level? Yeah, it gave a nice break up above, but then it closed back down below with no sign of support. So these next few candles over the next day or two, these are 4-hour candles. These are going to be important because we've got a bearish fair value gap that has proven to be resistance. And what I'm going to look at is the golden pocket. We have, ladies and gentlemen, we have a golden pocket getting some bearish confirmation. Look at that. This is kind of bearish, folks. So at least on the 4-hour chart, I would have liked to find a short right around there. Oh, hey, I'm already in a short. Lovely. I shorted, I think I shorted like right at the top of this candle right here after this massive break. And I took profits down here, and then I'm letting the rest ride because I'm still bearish, all right? What we've got, this is a bullish fair value gap, so I'm giving it the bullish color. What we've got is some draw on liquidity down here, and that's basically it. We're looking at these next few hours to see what happens. This doji could, and that is getting real thin. Anyways, I am targeting lower lows, okay? I think I have my final profit target for this short set here below this low. And I might get stopped out, but that's fine because I've already covered the trade more than enough. Like the half of the trade that I closed was in enough profit that even if it goes to my stop loss now, I still walk away with profit, not break even, okay? So that's why I'm just letting the short ride. And also it's nice to hold a short because you get paid the funding rate. I think I'm up to like the funding rate payment that has paid out over the last few days is more than covering the trade fee.
Yeah, mine is paid out more than my profit right now because I de-risked a lot.
Holding a short for 3 days, your funding rate adds up. That's nice. Depends on which exchange you're on. Some exchanges, they have the funding rate roll over and pay out every 4 hours. So what you've got is 21 payouts of 0.01% or 0.1% or whatever the funding rate is paying you. So yeah, it's nice. Anyways, I'm curious. I want to keep going down the time frames here and just see what we got. This is bearish. Look at this 1 hour chart. Another fair value gap in the 1 hour chart. Stacking anytime you stack fair value gaps like that, that's really nice. And this whole area does not have much in the way of fair value gaps that have been respected. So it's hard to say what's really going on here, but we could draw this one little fair value gap here. We're really nitpicking here, folks, but that's kind of bearish. There's no, look at that. Look at how there's no other fair value gaps in this entire area, okay? That tells me that something is happening. The big players are taking profits, maybe, on their long from way down below, okay? We're only on the 1 hour chart, so we're assuming that the big players got in way down below. But with this efficient price action of no fair value gaps except right here, I am inclined to just say, draw the 1 hour market structure.
And I do want to say, on the daily, we've seen this market structure before, where you have the all-time high, then it retraces a little bit, and then it sweeps the all-time high again, and then it goes back down. And that was our previous all-time high. I think it happened at like the 40,000 all-time high, and then I think it happened again on the second 109 all-time high. And we're only talking a difference of like $4,000 dollars, which is microscopic when Bitcoin's this big. From the previous all-time high to the current all-time high.
So here's the 1 hour market structure, folks. That's an SFP right there. See how it wicked above that level and did not close strongly above it. Now we're going to start looking at our 3060 par. Let's pull that up. Yeah, bit of a bear div, bull div, coin toss situation right here. That's the bear div right there. But obviously we're also getting into bull div territory here. Okay. And this is when we start saying, when you see bear divs and bull divs squeezing in, then it's time to check the smasher indicator. Okay. Where was I? This is a bullish divergence.
Yeah.
So we got bull div, bear divs kind of squeezing in on each other. And
look what par is forming too. Like if the 3060 doesn't actually get up, or it doesn't matter where it goes, it's essentially going to make a giant bear div on that as well.
You mean how high this goes?
Yeah, like any hump that it has.
Oh, yeah, you're right. So that's a good thing. I should draw this out. So this got all the way to the high, and that is like the retracement has gotten so low that yes, it had a dip, but this is what Mickey is saying, y'all, is even if par gets up above the all-time, even if price goes up above the all-time high and makes a new all-time high, it's probably not going to break this high. It's probably going to just get up around here and then roll over and drop again, which is another bear div and thus an indicator that what we will eventually get on price is more downward price action. Okay. Now the problem is this can take a breather, and this drop, because again, we're getting pressure from both sides. We got bull divs, we got bear divs. This could pressure, and it could drop all the way down back to the low and reverse, and it still doesn't get that much lower than this, and we're back off to all-time highs. So when you see this type of double pressure squeezing from above and below, you have to change your mindset. You know, this is when like everybody who talks about trading profitably long term, you eventually have to discuss the conditions under which you do your best. And what I'm saying is, some people are great at finding trades when the market is trending. Other people are great at finding trades when the market is just stuck in a range. And you need to identify that, because if the market is trending and you are a range trader, you're going to lose all your money. Or if the market is stuck in a range and you keep expecting a breakout, you are going to lose all your money. So what does that mean? This is the free coaching that I'm giving you all now, and I talk our private Discord members through this every week. And that is, when you see the price look like this, we've got SFPs of the highs and the lows, and it's just wick up, wick down. And then you got a bullish divergence that turns into a bearish divergence that turns into a bullish divergence. You have to notice both sides of it, and you have to say, okay, this is going back and forth. I need to take trades that are accounting for this range. You are stuck in a range. Do not expect every trade to be a massive breakout, okay? So if you get to this high and you see the most bearish setup ever, you only trade it back into the range and you start taking profits at the liquidity. Same thing with this right here. Let's hide all this and pretend none of this is happening, okay? And I got a long history of stuff here. 1025, let's see. 2025? Wow, I must have cleaned it up a lot. 2025. That's weird. None of it is the original dates. Anyways, same thing here. We're inside this range, okay? I take profits internally. Like if you're in a short, if you find a short on this golden pocket level, you should be taking profits at this fair value gap. You should not be holding your entire trade all the way to $90,000, okay? You need to trade from external to internal or from internal to external. That's, again, basic ICT terminology, and it's good to know the language. Even if you don't believe ICT, you should know the language. You should know how to speak in terms of market structure and liquidity. And then whatever setup you want to find for you actually entering and exiting your trades, use your indicators, use your strategy, whatever it is, okay? Are there any questions?
Let's take a look at, let's see here, we got one. Is that really for every short?
What do you mean?
Oh, funding rates. No. They're variable. So, if it's like a bearish market structure, you'll end up getting a funding rate if you're long. So there's algorithms that they put into place on each exchange, and each exchange has different rates. And then you can actually like sort on some exchanges the funding rates and play the funding rates. Like I've seen people do that on Hyperliquid. It's crazy. Like I see people just essentially farming the funding rates.
Yes, it is called positive carry, and there's literally a multi-million-dollar yacht named called positive carry because it's been that lucrative of a trade strategy.
That's
Google
crazy.
positive carry, CARRY, if you want to learn more about that strategy. And then I forget what the other thing is called, where there's the other strategy of holding, take whatever funding rate is the highest, positive, and you hold a short. And then you take whatever funding rate is the lowest, negative, and you hold a long, and you just pray that the price action doesn't go nuts, and you just turn a profit by holding those two trades in equal balance and rebalancing so that you're always holding, you know, about $100 of each position. Because sometimes one goes up and then suddenly you've got $90 of one position and $110 of the other position, and then you have to rebalance it. But either way, as long as you are relatively balanced the whole time, you just get paid the funding rates, and that's a strategy. That's a much more advanced algorithm, but that does work.
Freedom
The
Lover.
point is, funding rate pays you to trade against the trend, basically.
Yeah. Freedom Lover is saying once I was in a in a short in some short, and they took $106 for a $200 trade. That's an expensive trade. And people,
Yeah, I bet you were probably shorting a extremely crazy altcoin that was going absolutely bonkers, and everyone, yeah, so everyone is like, if an altcoin has gone absolutely through the roof to the moon, and everybody's like, oh my gosh, this thing is just way out of, like, it needs to drop, it's crazy. What happens is the funding rate goes negative because everybody is shorting the coin to high heaven. And the funding rate goes negative, which means you have to pay for the privilege of going short. Because otherwise, if they didn't do that, everybody would short it so much that it would crash, that the futures price would crash and break away from the spot price. Because you can't short a spot price. You can only buy and sell the coin. So the funding rate is what helps the futures price stay in synchronization with the spot price. So when everybody is shorting the coin to death, the funding rate goes negative through the roof. I've seen it as crazy as negative 3%, which means you are paying 3% of your position every 4 hours. So if you're holding that for 2 days, you're paying a massive amount to hold that short for 2 days. It can be 2%, 3% that you are paying to hold the short.
On every
Now,
exchange,
one strategy that I learned was if you see that coin where the exchange is, the funding rate is like negative 2 or 3%, look for a long, and you get paid to take that long or to just hold the long for a while. If it's flat, if it has a moment of calm, you get in, you find a long, you hold the long. And that used to be that was one of the earliest strategies that ever worked for me. And I 10x'd an account. This was like 2 years ago. I 10x'd an account just by using tools to find where the most insane funding rates were, and then either shorting or longing those coins using a valid setup. You're not just hopping into these coins randomly holding positions. You use a valid setup to find a long or a short based on the funding rate paying you. And then sometimes the trades win and sometimes they lose, but you get paid so much on the funding rate that you're turning a profit no matter what.
Yeah.
And that strategy did stop working eventually, and I never bothered to like do the research and development to update it because I think the environment just kind of has changed.
Yeah.
And there's better ways to make money. But it has been a valid trade strategy.
And I do want to point out, on every exchange, it should be listed either on the same line as your ticker name, the exchange rate, whether it's positive or negative. So that's something to look out for. A lot of people don't pay attention to that, myself included. I'm always pleasantly surprised or disappointed when I'm like, holy crap, I need to get out of this trade. It's too expensive.
Yep. Always check your funding rate.
Let's check. I wanted to check out Bitcoin dominance, and then hype just fucking took off. So I think giving that some love too. We got kudos. Did you see who was it? Let me look in the Discord here. I think it was Dr. Schwanz, or maybe it was Hammer Blukin, or whatever his name is. They got the long on hype because we called it and he thanked us for it. And it kissed 40. So the situation with this that sucks for me is that I was staking hype, and I didn't realize that there was a 7-day cooldown to on stake your tokens. So at like 33, I was like, all right, I'm on staking. And I was like, oh no, I have to wait 7 days before I can take profit on this. Like, damn, I hope it keeps going up. And that spot position that I took on hype is if at this price now, it'll bank me about like 130% return on spot.
We haven't checked Money Minter in a while. I want to look at that. Beautiful. Look at that. Absolutely beautiful.
Yeah, same there. Oh my god, it's killing me, Freedom. Oh my god. Yeah, I'm like, like, hurry up and unlock. I know.
Yeah, this is getting bearish. Money flows rolled over. We got a double bear div. That's not good.
Yeah. I mean, honestly, I still think it's a good hodl. Like, I do see 100 in the future. When the future is, I'm not sure. I'm thinking when alt season starts, this will be one of the coins that people really pay attention to. Because what would you
the nice thing is you have this squeeze block here.
What would you call this? Would this be like a mid cap, or is this considered small cap?
I don't know. I'm sure there's a technical definition for the market cap of coins.
Yeah. Yeah, no, I love.
But honestly, as long as we love Hyperliquid, so we love the hype coin. Oh, I wanted to check out my friend's coin that's basically a trend following stable coin. Not a stable coin, but it's based on trend following. Let me see. What I was going to say about hype was we have a squeeze block here, and we know that this is a long-term, like, the future of DeFi or the future of crypto or the future of whatever technology. So based on this historic high situation here, and based on this squeeze block here, I'm just going to start loading up all the way down to 25. And like, I loaded up down around this low when this trend line didn't get touched, and it reversed. Started getting in 10, 12, 15 bucks, just holding and holding. And I'm not re-adding to that bag. This is a good spot to take some profits if you can, but I'm not adding to that bag again until 28 or so. Oh, darn. This is a coin on Hyperliquid. Find it under Trend USD.
Okay.
It's supposed to be some sort of trend following algorithm coin.
Hyperliquid coins aren't on TradingView, which drives me insane. But we do have things in the works, so just keep that in mind.
Yeah, cool. Oh, I wanted to check. You wanted to check Bitcoin dominance.
Yeah. Dominance is I'm curious because it like the real action is happening on the weekly chart for me. Because the daily is so blah.
Yeah, but look at this. The market smashers just. Can you trade BTC.D?
I don't
I think you
know.
can.
I don't know because there's no price on it. It's only percentages. Like, what are you trading against?
Ask Brock.
You know how it's too. It's too.
It's just a future.
Yeah, but you usually do two different assets against each other if you're trading, and this one doesn't really have that. Let's say you buy all the other coins to trade against Bitcoin.
Look at this.
So,
All right, we're not supposed to look at money, but I can't help but glance at this. Profit factor 5.0.
wow.
Oh my gosh. Okay. We gotta figure out how to trade this.
We got a chat from Twitch, and it's one of those scam chats. It's like cheap viewers on Steambo. They're trying to get me to buy viewers. It's freaking hilarious. I'm like, no,
Ooh.
dude. Thanks for the view, I guess. Like and subscribe. If I can get all the bots to like and subscribe, that'd be cool.
Yeah, so Bitcoin dominance is getting in the bearish territory again. 4-hour chart, 1-day chart. It's ripping.
Yeah, I have a couple trend lines. I have a trend line all the way from that bottom to the left going up, and then that one's getting a little respect. Then I have another one about December where that dip is, where your line's going right through your blue vertical dotted line. I have another trend line there, and both of them it's like pretty much playing in between both my trend lines, which is kind of interesting.
Well, let's draw a pitchfork here. This is ridiculous. Look at that.
Yeah, I know.
Okay. All right, kids, pay attention. This is called a pitchfork, and it comes in 3 main flavors: original, Schiff, and a modified Schiff. And as you can see, it allows you to define a trend, and it allows you to find where trend lines may exist before they exist. So, for example, I dragged this all the way out, but you will be shocked to find that these types of trend lines work long before they are actually well defined. So see how I used just these 3 points here to create this pitchfork, and yet it's getting respected all the way along here, and then all the way along here on this outer edge. That trend line is still getting respected, and then it's trying to get back up here. So what this means is these lines are not really that, you can't really trade off of these lines. They're more of a telltale sign, a trace, hint, a signature of giant money market making algorithms. Because if this is the Bitcoin dominance chart, but if this was the Bitcoin itself chart, what it would demonstrate is an algorithm is the only thing that can get in and out of the market with this level of precision. You can't just organically have one guy or a few traders being like, oh yeah, I'm going to maintain this line and sell, buy. What this cumulatively means is the market as a whole, all of the emotions of all the traders, and massive algorithms with millions of dollars under their firepower at their disposal. The whole thing is in agreement of uptrend. Okay, that's what this means. When you draw a pitchfork like this and you see this, that's what that means. Then, to get a little bit more confluence, what we do is we justify, we can adjust modified shift. No, that's not even doing nothing at all. Regular shift, no. So the original is what is at play here. The original type of pitchfork. And you'll see sometimes modified shift or regular shift will match perfectly instead.
And they literally just flip the switch. Yeah.
And so what you do is you draw these things and then you wait for price to exit that situation. So right now, with things looking this way, we are in danger of bearishness happening, except for the fact that if I drag this over, you can kind of see how it's still in an uptrend. And so maybe we're just a magnification factor away from that original trend. But here's what we do. We go down from the weekly chart to, say, the daily chart. And nothing really there yet. If I go to draw another pitchfork from this low up to this high, obviously this original pitchfork is no longer in play. So what do? We check the modified. Oh, look at that. So what does this mean? Look at how perfectly this is lining up. Now modified shift, and then shift is even more at a lower angle. The shift pitchfork is at the lowest angle, and then modified shift is a bit more upward angle, and then original is the steepest angle, okay? What does this tell you? Originally, before, on the bigger chart, the weekly chart, the original, the steepest of the trend angles was the prevailing trend. Now, we have to switch to modified or regular shift in order to see the trend being respected. What does this tell you? It tells you that the trend is less steep on this smaller time frame. It means that there is somewhat of there's some lessening of the upward momentum of this trend. It's still definitely an uptrend. Like, look at the amazing precision of these lines. I'm only using these 3 points here, this one, and this one. I'm using those 3 points, and then yet in between these levels, the blue is 50% or 25%, the orange is fib levels like 618 or 786. I customized all of this. But look at the precision that this is following this trend all the way out here, long after I drew this pitchfork. So it means that the algorithm and the market as a whole is in agreement, uptrend. That's the agreement. So we could go down. I'm going to skip all the way to the 1 hour chart. See how that, oh, I love seeing this precision. This is like, it's incredible how precise this stuff can get. And then if I do another one here, and let's go to the first high and the first low. And then we're gonna, yeah, see it's still, I'm gonna hide this one here. See how we're kind of falling out the bottom of this trend pitchfork? I'm Schiff. If I go back to modified, it's gonna be, see, now on the 1 hour chart, even the modified Schiff is, we have fallen out the bottom of it, okay? So now on the 1 hour chart, we are looking at the least steep of the pitchfork tools. I could go one for you. Hopefully, if you're a keen observer, you've noticed this last one called Inside. That flips it, or it allows it to possibly be flipped all the way downward. So, for example, if this pullback were that bad, even though this had been an uptrend, then it would have allowed for a downtrend. Now, looking back in time, see how this is starting to respect these lines here? I just dragged this down to an arbitrary level. But looking back, look at how this is starting to show some respect for a downtrend. What does this mean? This means that, I'm going to undo this. And now see how, oh, wow, look at that. This is incredible. I feel like the, what's his name? What was that guy back in the 90s? Huell Hauser. Do you guys, nobody's going to remember Huell Hauser.
No.
Google Huell Hauser, guys. His TV show was called California Gold. And he would literally just go around California and being like, look at this cool rock. Wow.
Would you look at that?
That's how I feel. Wow, this is amazing. Yeah, it was hilarious. But okay, this is incredible. I drew the Schiff pitchfork, no, the inverted pitchfork using these 3 points back here, okay? I'm getting excited. I'm going to start circling this for you. Here. And then here, this is the second point. You draw it from a low to a swing high and then a swing low, okay? That's 1, 2, 3, those 3 points. And then this, what is this number? This might be 2 point something, 2.618. So this is a 2.618 fib extension away from this dotted white line. Look at that respect. That is incredible. That, you cannot do that without an algorithm. I'm going to draw a ray on this and we will see. Look at that. That's wild. Perfect line. I'm going to go down to the 1 minute chart just for giggles. Look at that, guys. See how this is respecting these? And on the 1 minute chart, you can start seeing that downtrend starting to take place. Yeah. So what this means is there are algorithms at play. And they are saying Bitcoin dominance is running out of steam. It had this nice uptrend. Fantastic, fantastic. You know, you can drag these lines around and kind of see how that kind of lines up. But it's losing steam. So here's what all of this is leading us to think about. Bitcoin dominance is running out of momentum, which equals alt season coming. Mm-hmm. What could we see? What could possibly, I'm going to go back to the Bitcoin chart. Here's what we want to see on the Bitcoin chart. Let's go back to the daily chart. What we want to see on Bitcoin is holding a level say Bitcoin for the next week or so finds support at one of these levels and bounces and then just kind of, or maybe it bounces off of this level and just kind of hangs out. Maybe it retests the high and just kind of hangs out. If Bitcoin doesn't just immediately slam to one of these lows and just crash to 90,000, that's bullish for crypto in general. However, Bitcoin needs to catch its breath. So in that window of opportunity between Bitcoin raging on to 150K and not crashing, while Bitcoin is catching its breath, in this range, somewhere around here, let's give it a whole month. Somewhere in this month, there may, as long as Bitcoin doesn't start crashing below critical lows and disrespecting them, like if Bitcoin could get down here, but if it bounced really hard and had like a nice wick and a strong reaction off of this level around the golden pocket, that would still count. There's a crazy alt season somewhere in here. Okay, guys, that's what I'm saying.
We got some coins to look at from Freedom.
Fantastic.
Yeah, let's keep this going.
You want to do it in private or let the public in on our special TA?
Yeah, let's let the public in. It's a holiday, right. So
yeah. If you guys are watching on the public channels, we do private TA. I live stream in the morning when I'm trading sometimes, or I do private coaching in the morning. Market open New York time. We take special requests. Private. We do private coaching, and yeah.
The first one's SUI.
SUI,
correct.
Oh yeah, I think I have some of this. Oh, that's lame. Womp womp. Well, at least my line that I squiggled is coming true, so that's that makes me feel okay about myself. All right, we're still bullish on some of the moving averages. We are breaking below some of the moving averages. Momentum is aimed down. That's I'm not too happy about that, but let's see. I want to get back to price action reader. Let's check the par. Yeah, the main problem with SUI is that we just have this massive chunk of inefficient price action down here that has given us this huge fair value gap that's untouched. So I've been holding SUI for a long time, but this right here has me worried, or at least has me hesitant to look for another long or do anything other than take profits. We already had this situation here where this old market structure here got almost completely blown out. This front run of this low, that's not good. So overall, we're not that happy about this coin because that right there is, what are we on? Weekly chart. That right there is not good. See, we have a double candle up here. So that is bearish, internal bearish market structure. But then, yeah, it's still bearish. Well, no, technically that's got a break above it right there. So internally we're bullish, and we could expect optimistically, we could expect a bounce off of, oh, look at that confluence. The golden pocket right there at that fair value gap. Definitely look for a long right there. But overall, the front run of this lower level, and combine that with, last but not least, this fair value gap that was completely untouched. So what this means is I'm not getting too emotionally attached to a long right here. I'll take a little stab at it and then I'll walk away
Freedom
if it doesn't work out.
You still think it's a good project for spot? I want to wait for retracement and then buy again.
Exactly. We still again, this isn't financial advice, but I have been holding it, and I'm just kind of blindly being like, yeah, I think it's a good idea. I'm not the research guy on projects because I've been burned in the past by so many other coins over the years. You know, projects, Cardano, XRP. Of course, those projects eventually had insane pops within the last year, but overall, it hasn't been that lucrative of a hold. So in terms of like projects being awesome, I don't put that much weight into that type of technical analysis.
Was it that chain?
I think it might have been TRX or something. I forget which.
Let me look.
Here's the good news. Look at this bullish divergence right there. So yeah, to answer your question very directly, yes. Long it from 2.76 or 2.5, 2.70, 2.6, 2.62, along it from those levels. And if you're holding on spot, I mean, you are still at risk of 50% drawdowns. That's not pretty. But it is what it is. When you're trading on spot and you're trying to gamble on altcoin projects, you're running the risk of a 50% crash at least. Yeah, I remember this now. The reason I drew that red forecast was this nasty bear div right here. So that was crashing. And then, so that's why I drew this, saying, hey, even if it pops, it's going to drop, and then down it goes. And here was a pop right here, and now we're dropping. I will say this, though. I kind of like it when a fair value gap just gets gradually grinded through, because it kind of means that players are defending the level. And then what happens at this level is the freak out crash, the liquidity grab, liquidations. So what you might get is a wick to this level, and then it just rips without all the people that are waiting down here. They might get left in the dust. So if you want to be brave and bold, you start longing between these levels. You know, get down to your smaller time frames, look for a nice bullish reversal, bullish fair value gap, or a bullish divergence. Let's see on the 4-hour chart. Yeah, this could give a bull diff right here.
Yeah. Okay, so this is the protocol that was hacked. The Cetus protocol exchange on the Sweden network was hacked May 22nd, so recently. So a lot of the coins on the protocol, let me see here. So you'll probably see the sell-off from the 22nd.
22nd of what month?
Of May. It just happened.
Oh, really?
Yeah. I wrote a little report about it in the channel.
Oh, I thought it was earlier. I'm thinking of a different coin. But yeah, there's it right there. A nice doji and then a drop.
And then let's move on to another coin. The next one is Pyth, Pyth. So Sui is one of those tokens. Cetus, LBTC, Lambard Stake, Bitcoin, Exol, AXOL, Lo-Fi, Hippo, Squirt, Bulla, so Bulla, and then Slove, Uni, Memefi, Sui RI, Mojo, Blub, and the Sui MON, Suimon. Um, even even USDC was affected by it. With
Oh
that,
wow.
the reporting on that is they essentially like were able to recover some of the money, and CZ from Binance actually came out and said that he's gonna support the devs on that project. So they have institutional backing from one of the big players, which is probably a power play for him. He's probably gonna take over the Sui protocol, be a major
Yeah,
stakeholder in it.
I never trust those big players anymore.
Yeah,
They always have an
Sam
ulterior motive,
Bankman-Fried.
no matter how benevolent they think.
Yeah. So with that, a hack on this chain, um, pretty demoralizing. So if we see what my assessment was, if we see what institutional powers do, that'll give us a little bit more insight whether we can recover the bullishness. But usually when a hack happens, it's a project killer. Um, it just goes to show that the coin wasn't developed well enough to prevent this kind of thing. And
Yeah.
with that, the loss of faith, like faith is everything when it comes down to the value of anything. So if it's a dollar and you lose faith in a dollar, then it's done.
Yeah, that's a good example. Here's what I'm noticing about Pyth, or Pyth. We had a lot of bull div, double or triple or whatever you want to call it. We had a golden dot on the daily. The moving averages are still 100% bearish, but we are seeing a ton of volume coming in. So if we switch back to the regular candles, we can see something really happened here. A lot of buying. Somebody's trying to maybe manipulate the coin. I don't know. And then it crashes back down and you get a spike of selling, but that's got some buying mixed in with it. Look at that candle. See the wicks on that candle? And then same thing here. You got a lot of selling and buying, but this is a bearish candle, but it's got a lot of buying mixed in with it. So
Pull up
what this tells me,
a fixed range volume profile.
look at that nice, look at that clean SFP. That is sneaky. This is really telling you something here, folks. This is a sleeper of a coin that could shoot to the moon. Okay, that's what happened. When I see this, you got manipulation. They're bringing it above this high to get everybody like, oh my gosh, buy. They have tons of buyers going in here on FOMO. Then it grinds back down below this low. All these people get wiped out. So look at this. The buyers, all the retail buyers that bought in this range, this whole range, all these buyers, I'm just repurposing my boxes here. That's a bunch of longs in this candle there. But then all those people were forced to sell in this candle here. See what happened? This is manipulation at its finest. So some market maker triggered this pump. They got everybody to freak out and get on board. Then they grind the coin back down because they got in here too. So they are taking enough profits to slam the coin back down. But then, within this tiny little candle, if we're being fair and we're only drawing the bodies of the candles, the forced selling, if you're forced to sell, you know, you're getting stopped out, you are in a bad position. So look at the size of these candles. All of these longs, they probably have their stop losses below this level. So that's why I want to draw this on the wick. This is what's happened. Everybody got in on all this pump up here. Then they were all liquidated here in these candles, in these two big red candles. And then they panicked and sold as well in this candle, and that's why it dropped back down. So this is just screams manipulation. And what it tells me is that we should look for a long right here in this range. We got a 4-hour squeeze going on. That is looking good. I'm going to check all the time frames here, okay? Look, you saw that on the 3-hour? There's a bull div right there. There we go. The moving averages are still bearish on the 3-hour. Still bearish on the 2-hour. Still bearish on the 1-hour, and this short paid on the market smasher. But on the 1-hour, we are getting money flow kind of getting back to nice. We could see a pump here. Let's switch back away from Heiken Ashy candles. Oh, that's a nasty slap. Ouch. So not just yet time to buy. Except at this level. I mean, if you're playing it real tight, there's your buy, put your stop loss below this low. That's it. That's all you got. Go back to high connection candles. Let's see what we got here. Still no bullish moving averages. Yeah, right here on the 30-minute. We're getting real close. 15-minute. All right, we got the 15-minute chart paying off long now after that short paid off. Okay. This squeeze just got stopped out or slammed. But other than that, I'm thinking we like Pyth for a long.
Oh, my money's locked up right now, man. Let's move on to let's see what the next coin is. Lumia. And then from Lumia we'll do a Hyphy.
Sorry, I'm just looking at Pyth on the 1 minute for fun. What's that? How do you spell that? L-U?
Lumia.
Huh. Similar chart. Had a pump. Died a tragic death. Giving us a little bit of potential bull vibes on the reversal here. This is one of those gamble lottery ticket coins where when you see it just die like this, you have to think there's a chance that it's manipulation or it's a sleeper coin that the big players are silently accumulating down below these lows. You can see a similar situation here with this price action where you had a sell-off right there and then you had some buying right there. It could be what is concerning for me is at this low. does not have massive buying going on beneath at it. So the major players are not necessarily present here.
I do
Okay.
want to say too, like, it's got plenty of room down. 33 cents. You can go to like fractions of a cent. So, you know, the bottom is pretty
Yeah.
far away. Like a possible bottom is pretty far away.
Yeah. So when you see these lows like this get put in and the price and the volume is not that much compared to these sells or this FOMO buying up here, this tells me that so far, what happened here? This little bit of a manipulation pump right there. And then nothing really happened. Maybe some selling there. This is so far, it's an unknown. This is kind of a flash in the pan coin that might just die or it might get manipulated. But here's what I'm saying. Watch this low because there's no volume there. There was volume here and here. So watch this high in case it just goes flying through that high. Then what that tells you is that we have strong market structure, strong displacement, okay? If price just goes flying through here, then you wait for a pullback and you get in and go long. But without a spike at these lows, neither of these lows had much of a spike. You have to expect, you have to be careful and wait to test and see if these lows are revisited. And if you get a big old spike in liquidations in volume, if you see a big red volume candle or a green volume candle like this at a wick of this low, that's your signal to get in long, okay? Oh, triple div on Money Minter. Look at that. Ouch. Oh, hey, what happened? In the last 20 minutes, we had a bit of a crash.
Oh, I want to check my short, but my VPN's off.
Oh my. Well then. That's fun.
Well,
Fantastic.
we predicted it. Like, it was one of our assessments.
Oh, look at this. That's beautiful. Oh, ladies and gentlemen. We got some volume coming in here. Nice, nice. This is exciting. I just want to sit here and watch. Look at this volume spiking, okay? Keep in mind where I'm looking at the Coinbase spot chart, which is where a lot of institutions get in. Like this candle, and this 1 minute candle, 27 Bitcoin were traded, okay? 28 Bitcoin were transacted in that one candle. We can check Binance as well. Probably has an even bigger. Yeah, on Binance, this is a capitulation. Look at that. 175 Bitcoins were dumped. Somebody sold off. Wow.
Almost $2 million.
60 seconds. 180 Bitcoin were dropped into the market. That's exciting. Look at that. Look at how that spike plays out with the rest of the chart. Yeah, see, we had a spike there on that drop, and then now we're having another spike on this drop. Let's play a game that I like to call predicting the not ready yet of a bounce. So the way this works is when you see it crashing, you don't panic. You don't try and hop on the short with FOMO, or you don't try and panic. What's it called? Get wrecked on, getting out of a long in a loss. you look at the volume, and then you zoom out until you find the next largest. Oh, I went too far. So the 5-minute chart, this is still the biggest spike around the volume. Look at that. 5-minute chart, 566 Bitcoins were transacted in this drop right here. And then, oh, in this bottom right here, oh, that was mostly buying. This is interesting, folks. So this had a ton of buying. I guess it was technically mostly selling, but it had a lot of buying in this candle. So this could be a reversal. We need to back out a little bit. Now, see on the 15-minute chart, we've got another spike here, but this was also mostly selling because this is a big old down candle with only a tiny bit of a wick. So sell, sell. This 15-minute candle still not closed. Let's go to the 1-hour chart. Finally, we're seeing bigger spikes in volume, okay? So this massive spike in volume is from this candle down here. Until, what this means is, until you see a spike in volume that equals this, maybe a like 2, 3, 4 smaller spikes could balance it out. But what it means is this is a level getting defended by whoever traded at this level. When you see a spike like that, usually it means that retail traders got liquidated and wrecked and they handed all their money over to the market maker, right?
Put your own spot.
That's what happens when, yeah. Oh yeah, so they got stopped out of their spot trades, longs. But we're looking okay right here. Like this could close. It's still got an hour, 30 minutes left in this 1-hour candle, but that could close above that level. And so here's what we're looking for. We're looking for a spike in volume. This spike in volume in this downtrend could signal a reversal, and we are back in an uptrend. See how that works? This spike in volume sort of signaled a reversal, and then it bounced, and then this spike in volume signaled the low, and then this spike in volume was approximately around the high, and now we could see another spike in volume. So what this means is we could expect a reversal at this level unless this spikes in volume get bigger. Okay, now you always zoom out and see where the bigger spike in volume is. In this hour, 6.5K Bitcoin were transacted. And that's a massive that's a massive spike. So right now, when you zoom out, what does this tell you? It tells you that the selling pressure is still bigger than the buying pressure. On the 1-hour chart, I'm not going to get super bullish until you see a big old green candle. You know, somewhere over here, you see a big old massive green candle that spikes up to this level of this candle here, which will probably coincide with a V or a whatever of that level. Of course, it could go up from here and then make that spike, but either way, what we're looking for is volume spikes that match previous volume spikes. That's how you read volume as its own indicator. But yeah, this is turning out to be a pretty impressive bounce so far. It's still not in the moving averages, but it's recovered this fair value gap quite nicely. Honestly, if this just rips right up to the high again, I'm inclined to close my short in profit, because this is a capitulation wipeout. And then if it just goes straight back up, then what that tells you is that all of these were chumps who handed over their money, and then these are the smart traders who are actually taking their money down at this low. However, what we're seeing so far is not that much impressive buying pressure. See how this downward pressure had this big ol' just wave of selling volume? And now so far this bounce is weak on volume. So at this high, we're going to see how it reacts. It could wick up out of this fair value gap. We got a fair value gap here. No, there's multiple fair value gaps, so I don't know. This is exciting. I go to the 5-minute. Yeah, we got more fair value gaps. See what the 15 minutes doing. Yep, there we go. More. So we got a lot of bearish fair value gaps to grind through before we get really happy again on bullishness. And this golden pocket coincides with that. So that's, I'm going to call that a fibby. And then I'm going to drag it over. And then we're going to go back to the 1-minute chart. So this is what we're going to do. We're going to watch this level. I'll hang out after the live stream ends, or I'll at least leave this chart open for the private Discord. But this level right here, I would expect it to slap. Got a little bit of a...
We got one more coin to look at, too.
Okay, cool.
And then we'll call it after that.
Here we are. There we go. We'll come back to that in a minute. What's our coin? The last coin.
HIFI. HIFI.
That's not looking good, folks. That's looking like a... Well, I will say this. It has one of the characteristics that we just described, and that is a volume spike. So see how this volume spike really, like somebody... What happens when you see this is you've got a ton of holders that were airdropped this coin, or they bought it on Dex Screener or whatever exchange. You got a ton of people that got in before this coin got listed. Then you had a absolutely massive spike in 1 week, and somebody, like, this volume does not match. Like, you could add it up, but how this much volume happens when this much volume has not even been traded yet before? What happens is people brought their coins onto the exchange and then dumped it on the unsuspecting buyers. Okay? And then same thing here. You had another massive spike. These 2 volume spikes alone far outweigh all of the possible buying that could happen. And now these are green candles, but their wicks are huge. So what this means is that, yeah, the buying pressure outweighed the selling pressure by enough to make it green, but it means that somebody is taking tons of profits on their longs, and they probably transferred their coin to the exchange here. Okay.
And they were doing it incrementally.
So that smells like
during the week.
So that smells like manipulation to me, or it just smells like a whale who's got tons to dump. Okay, but now look at what we have here. This has an incredible volume spike in this teeny tiny little candle right here. Okay, look at that. What have I said before every time? Wick below the low. close back above this current. Oh no, are we on, this is another closed candle. We've got to zoom in here real close. Okay, so it did close below that level. However, for an SFP, technically we need to carry it over to this level.
I mean, that's
and
still,
go like that.
It's still an ongoing candle too.
No, I'm talking about this candle right here. This candle closed below the previous level for an SFP. However, one of the various technical definitions of an SFP is that you should carry the new SFP to the new low. Okay, so right now, well, I'm not too scared. What I'm saying is I'm not that scared by this candle closing below that level, because this level already got messed up by this wick. What would really scare me is if a candle closed below this new level here. That would give me caution. Or we could also measure from this wick and say if this current candle closes below that 50%, then if it closes below this 50%, then we expect it to touch the low. If it closes below that low, then it's game over. All bets are off. But anyways, we're in this liquidity zone of this wick here. You could look for a long because, what did we say earlier? Massive volume spike here in this tiny little candle, which means all of these guys back here, all of these players that manipulated the market and probably sold. Say this is this is the wick up here. So the selling had to take place in here. All the profits that we're taking here on this is 560 million coins. 460 million coins were also in play at this low. Compare this massive block here against this teeny tiny little block here, okay? 560 million coins versus 460 million coins in this tiny little wick right here. That just screams the market manipulator, the market maker is getting back in. So it's a decent idea to say, hey, throw some lottery ticket money at it. And again, obviously that's not financial advice because I literally just called it lottery ticket money.
Absolutely.
But it's, it breaks up above this. Let's see how much room we got to play now. We're in this, and let's say, oh yeah, see, that's a long way to go. Even to get up to this fair value gap, you're at 50%. And then to blast through this fair value gap, you're at 100% gains. So you're really gambling. This is a bearish position to be in. This is a giant fair value gap, a bearish fair value gap on the weekly chart. And we're only going long based on this massive spike in volume. So this is lottery ticket money. This is not throw $1,000 at it and hope for $1 million. This is throw $10 at it and hope for $100. Seriously. How dare you say that is financial advice? Because I'm literally calling it gambling right now. But
all these
I'm curious. Like, I want to find.
Like,
yeah,
they're super new. So I think once we get more data, we could actually see the viability of these projects.
Yeah, and look at this. We're getting these 4-hour squeezes. We're getting these tight ranges. We got a bull div. Like, as much as I call it gambling, this is a smart, calculated, careful move to make right here, going long on this. I would layer in. I would say, you get in, you want to get skin in the game right here. You do a trigger stop market order if it breaks above the high, or you do a limit order below one of these lows. But you got bear divs left and right. You got a squeeze going on. It's a fantastic lottery ticket to buy.
All right, well, let's call it here.
That's
and then
exciting.
we'll
Let's
take.
let's check in on this one next week.
Yeah. Well, you won't be here next week.
Oh yeah, I'll check in on it next Monday night when I get back.
Okay. Okay, so we're gonna call it here. Thank you, Freedom. Um, yeah, be sure to check us out. We're on X, we're on YouTube, we're on Twitch, we're on Rumble. You can catch all of our live streams on any of those platforms. I do prefer X because it's a bigger market audience. Um, yeah, we're gonna be taking it into the private only group from here on. Just pretty much hanging out and watching the 1 minute on the Bitcoin. But yeah, come to the website, check us out. You can try us for a free trial, and then be on the lookout for deals coming soon. We'll consider that. So, all right, thanks for joining us. We'll talk to y'all later.